the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore equities began the day in the red following mixed performance overnight in the US and Europe. So in early trade, the Straits Times Index was down 0.1% to 3,869 points after some 52.1 million securities changed hands in the broader market. But as we shared with you earlier, this has changed. The STI closed in the green, so let's take you through the closing numbers. Well, the STI closed up 0.21% at 3,882 points. In terms of value turnover, we are looking at 1.45 billion Sing dollars. Now, gainers outnumbered losers, 281 versus 261. Top advances for today, we've got here GMHUSD, Seatrium and iFast. And top decliners for today, SGX, Jardine Cycle and Carriage and Grand Banks. Now, in terms of companies to watch, we have for you Seatrium, and we'll tell you why we're talking more about the offshore and marine specialist today. But elsewhere, from U.S. consumer inflation increasing more than expected in January to OpenAI simplifying its AI products for users, we've got more international and corporate headlines in focus. And also on deck, how shares of this fried chicken fast food chain actually climbed more than 5% today in the Philippines. Make a guess. Well, first things first, let's take you through the counters to watch on the SGX. First up, as we promised you, we've got here Seatrium. So what is happening here is that Seatrium inked a memorandum of understanding with BP Exploration and Production for deepwater floating production unit. Now, the unit will support the development of BP's deepwater assets in the Gulf of Mexico, which was renamed the Gulf of America by U.S. President Donald Trump. So, back to the MOU. Under the MOU, Seatrium will provide engineering, procurement, construction and commissioning services for the floating production unit designed to support the development of BP's deepwater assets in the Gulf. So, if we look at shares of Seatrium, it's up 10.87%. Now, what is worthy of note is that as at about 11:30 a.m., it was up 8.3% to 2 Singapore dollars and 49 cents already, with 48.6 million shares changing hands. So that's what we are looking at. And the last time it closed at such levels, back at about 11 a.m. Singapore time, was in February 2018. And we're looking at it closing up 10.8%. Now, aside from Seatrium, we're also tracking Digital Core REIT because Digital Core REIT posted a distribution per unit of 1.8 Singapore cents. 1.8 US cents, I beg your pardon, for the 6 months ended December, which is up 1.1% from the year ago period. Now, its revenue for the half year was 9.8% higher year on year at 54 million US dollars, coming largely from straight line rent written off during a customer bankruptcy back in the second half of 2023. So if we look at units of Digital Core REIT today, it is up 3.883%. Let's stay in Singapore because we want to have a quick look at the latest employment income numbers out today. Singapore's median household employment income was up 1.4% in real terms last year. We're looking at 2024 over here, which is lower than 2023 amid lower inflation. And this is based on data from SingStat, or Singapore Department of Statistics, out today. Now, for some context, if we look at inflation levels, headline inflation in 2024 averaged 2.4%, which was a significant sort of moderation from that 4.8% we saw the year before. So back to 2023 numbers, median household income from work after accounting for inflation grew 2.8% in 2023. If we look at 2024's numbers, that was up 1.4%. Now, in nominal terms, median monthly household employment income grew 3.9% to 11,297 Singapore dollars in 2024, down from 7.6% in 2023. And accounting for household size, household employment income per household member, that rose 3.3% in nominal terms. And we're looking at 3,615 Singapore dollars last year. So, after accounting for household size, if we look at household employment income per household member, that rose 3.3% in nominal terms to 3,615 Singapore dollars last year in 2024. Now, in real terms, though, that increase is only 0.8%. So those are the numbers that we are looking at. From Singapore, let's take you through movements in regional markets. Asian markets closed somewhat mixed, but they were mostly higher earlier. Why so? Forecast topping U.S. inflation, that was overshadowed by hopes of an end to the Russian-Ukraine war, because news emerged that U.S. President Donald Trump and Russia's Vladimir Putin, they had discussed peace talks. Now, to this end, Trump said he expected to meet his Russian counterpart in Saudi Arabia in what he calls the not-too-distant future to find a route to ending the 3-year conflict. So, Trump said the two held a lengthy and highly productive conversation and added that he expected they would visit each other's countries. Similarly, on the Kremlin side, the Kremlin said the call lasted nearly 1.5 hours, and the leaders had agreed that the time has come to work together. And I'm quoting here, the time has come to work together. So, Ukrainian President Volodymyr Zelensky also said he had a meaningful conversation with Trump and that the leaders discussed ways to end the war. News of the apparent thaw between the nuclear-armed powers that provided a boost to risk appetite. The euro and the pound both rallied against the US dollar. And oil prices in the meantime fell again today, having shed more than 2% yesterday. And if we look at Asia, well, somewhat upbeat. Towards the end of the day, a bit mixed over here. Let's take you through closing numbers in Asia. Well, Australia's ASX closed up 0.06%. Nikkei 225 in Japan closed up 1.26%. South Korea's Kospi closed up 1.36%. Hong Kong's Hang Seng closed down 0.2%. And Shanghai Composite closed down 0.37%. Okay, now since we talked about U.S. President Donald Trump, we must also look at U.S. consumer inflation. That's where things get interesting. First, let's take you through the drier bits, the numbers over here. U.S. consumer prices increased more than expected in January. Yes, we're talking about the CPI numbers. So that reinforced the Federal Reserve's message that it was in no rush to resume cutting interest rates amid growing uncertainty over the U.S. economy. The Labor Department's Bureau of Labor Statistics, it said the Consumer Price Index jumped 0.5% in January after gaining 0.4% in December. Now, in the 12 months through January, which is a yearly basis, the CPI increased 3% after advancing 2.9% in December. So economists polled by Reuters earlier, they had forecast the CPI gaining 0.3% on a monthly basis and 2.9% on a yearly basis. But instead, what we're looking at is 0.5% on the monthly basis and 3% on a yearly basis, so slightly higher. Now, some of the rise in the CPI in January probably reflected businesses pushing through price increases at the start of 2025, and businesses could also have preemptively raised prices in anticipation of higher and broad tariffs on imported goods. Now, already earlier this month in February, we saw how U.S. President Donald Trump suspended a highly telegraphed 25% tariff on goods from Mexico and Canada until March, but that 10% additional tariffs on Chinese goods went into effect in February. And economists expect that those tariffs, when they're eventually enforced, will lift inflation as well. Now, speaking of U.S. President Donald Trump, here's his response to the unexpected acceleration in consumer inflation. Now, he had blamed his predecessor, Joe Biden. So shortly after the CPI data was published, Trump went to his Truth Social platform and he wrote, saying, and I'm quoting over here, 3 words, Biden inflation up, exclamation mark. Biden inflation up, exclamation mark, and in caps, seeking to blame Biden for the CPI numbers, which included, the CPI figures included 12 days in which Trump was in office. So speaking to reporters in Washington later on, the White House press secretary also said, and I'm quoting here as well, "It is far worse than I think anybody anticipated because unfortunately, the previous administration was not transparent in where the economy truly was." What do you think? Some food for thought over here when it comes down to inflation. But tonight we'll have more producer price numbers and we can have a better picture of the U.S. economy. Now, finally, let's begin to wrap up the conversation by talking about artificial intelligence or AI. Now, we must talk about OpenAI over here because OpenAI's CEO Sam Altman said OpenAI will not release O3 as a standalone AI model as the ChatGPT maker looks to sort of simplify its products. Now, he said OpenAI will release a GPT-5 model as a comprehensive AI system that will incorporate O3 along with other technologies as well. And OpenAI had unveiled O3 and O3 mini models back in December 2024. Now, if you find it very complicated, perhaps you're not alone because when commenting on the move, CEO Sam Altman noted that OpenAI wanted to do a better job in simplifying its product offerings. So he said OpenAI realized how complicated its model and product offerings had gotten, and it now wanted AI to just work for its users. Now, Altman did not share any timeline for the release of these products that we mentioned earlier, and OpenAI did not immediately respond to a Reuters request for comment, but simplifying the product lineup. And how can we let you go before giving you some ideas on what to have for dinner? Speaking of which, how about some fried chicken and sweet spaghetti? Guess why I'm bringing this up? Can you guess which company sells fried chicken and sweet spaghetti and is listed in the Philippines as well? Okay, no guesses over here. I think it's pretty obvious we're looking at Jollibee Foods. Well, shares of Jollibee Foods climbed more than 5% today after the Philippines' top restaurant operator said it secured the boss's approval to remove a 40% cap on foreign ownership of the company. So if we look at the stock, it was up as much as 5.4%, leading gainers among large-cap Philippine stocks and outpacing the benchmark index. So the company said this is, of course, in line with changes in its articles of incorporation that removes its ability to own, to acquire, or to mortgage land. So that's what's been boosting the Philippine top restaurant counters shares for today. And that's all that I have for you on Market View. So what do you think about fried chicken for dinner? Let us know anytime. The magic number over here is 8855-0893. And of course, we talked about OpenAI just now. We talked about U.S. consumer inflation and Trump's comments on that unexpected acceleration. We also talked about Seatrium and Asian stock market movements amid hopes for an end to the Russian-Ukraine war. Let us know what you think. The magic number, 855-0893. And once again, that's all that I have for you on Market View. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.